5 stocks to buy now in May 2025. Reviewing your strategy multiple times a day is critical due to news such as U.S. China trade updates or earnings reports. Monitoring real-time data ensures your portfolio aligns with shifting sentiment and technical indicators. Even long-term investors benefit, as consistent reviews confirm whether fundamentals, like a company's revenue growth, still support your thesis. It's May 2025, and with U.S. China trade talks gaining traction, 5 stocks shine as buys. Let's dive in. Nvidia, at under 5. Nvidia is 30% off its peak, but powers AI with its GPUs. Q1 2025 revenue is set to 65%, with a $3 trillion market cap. China's openness to talks signals stable chip demand. Taiwan Semiconductor, trading at $160, TSM makes chips for Nvidia and others. Q1 revenue rose 20% with a 20% CAGR forecast. Trade de-escalation boosts its outlook, 37% below its $262 fair value. Alphabet, Google, at $170, Alphabet's a bargain at 16.7 times forward earnings versus the S&P 500's 25. AI and cloud fuel 15% revenue growth. Reduced trade friction supports global ad spending. Berkshire Hathaway, BRK.B, at $450, Buffett's conglomerate beats the S&P 500 with $300 billion in cash. Its diverse portfolio, from insurance to railroads, thrives in a stabilizing trade environment. Waste Management, WM, at $210, WM's up 10% with a 10% dividend hike. Q1 free cash flow jumped 15%. Unaffected by trade talks, it's a recession-proof anchor. The risks: Nvidia and TSM rely on global supply chains, vulnerable if talks stall. Alphabet faces antitrust scrutiny. Berkshire's size caps big gains, and WM's valuation requires consistent execution. Investor advice: with China evaluating U.S. trade talks, buy Nvidia and TSM for AI exposure, Alphabet for value, Berkshire and WM for stability. Grab Nvidia below $100, TSM near $150 on dips. Diversify, hold long-term, and only risk what you can afford to get ahead of the game. Thank you.